Welcome to an extra special trade sploshing episode. We're going to have various segments on the show punctuated by rounds of higher or lower. If you donate and your answer is in line with the flip of the card and you get it just 9 times in a row, then you win a fantastic t-shirt, which I shall show you later. The first segment of the show is Evergrande and the Chinese property crisis, its impact on the greater economy and what it means for you. There have been high-profile arrests and a deepening debt crisis at Evergrande, China's second largest development firm. They face a deepening financial crisis, leading to the investigation and detention of the founder and chairman, Yan. It sent shockwaves through the property sector and the broader economy in China. This is due to government regulation and a crackdown. It's not stemming from the rule of law. The regulation has a different approach, very much hands-on and from individual autocratic systems. The Chinese government's efforts to stabilize the real estate market has then inadvertently triggered a wave of defaults, which has hit major developers. It includes Evergrande, but it's not limited to them. And it's due to the stringent regulations that have been imposed since 2020 to curb high debt levels within the property industry. It's causing a domino effect that is hitting all developers. Nearly half of China's home sales have been affected as companies responsible for significant sales defaulted under these new regulations, which caused a domino effect, threatening the stability of the country's commercial sectors. This is a systematic challenge now with wider implications. Country Garden is teetering on the edge. Evergrande's crisis has highlighted a systematic challenge within the property sector, and other major players like Country Garden are now also facing a similar fate. Analysts are warning that a prolonged restructuring process for Evergrande could lead to similar crises occurring, with the whole system exacerbating the problem itself. Founders' fortunes are plummeting. Yan, I hope I'm getting that at least close to being correct. Once of China's wealthiest individuals, I think he was around the 30th or 28th, he saw his fortunes plummet amid this recent crisis, which reflects the severity of the situation. Evergrande's rise and fall have become symbolic of China's property dynamics. Its inadequate governance system is then exposed. Analysts have been criticizing China's system, citing the direct government interference as a factor that allows companies like Evergrande to expand uncontrollably across various industries and regions, which leads to this becoming a problem in the West. We might say too big to fail, the systematic nature of this idiosyncratic risk. It has an impact on China's economy and global trade. The real estate sector's significance contributes 30% of China's gross domestic product. It makes it a crucial component of the country's economy. The crisis in this sector directly threatens China's economic stability and growth prospects. China's reaction on global trade has been quite significant so far. It's a major player and closely linked in all international markets. The real estate crisis and the potential impact on China's economy is now raising concern among international investors and businesses, which might be impacting global trade dynamics, because of course it's not just the property that won't be needed, but the cars to drive there, the jobs in that area, and the greater implications of this problem, leaving ongoing fluid situation with broad implications. There is a crucial October court hearing The upcoming hearing is in Hong Kong and is anticipated to provide some vital insights into Evergrande's future, with the implications of this crisis extending beyond simply the legal proceedings. And hearing more of the story from the horse's mouth, so to speak, will be helpful. Also to know the nature of the detention that the founder and chairman is currently living with. Fundamental questions about the Chinese economy and its governance persist. The crisis raised fundamental questions about the Chinese economic governance and its resilience with regards to these type of explosive boom and bust issues. And as we've seen in the real estate market, will this get worse? Unprecedented challenges so far. The questions have implications not only for China, but for the global economy, which reflects the interconnectedness of international markets. And that is the Chinese property crisis, not just for Evergrande, but Country Garden and other development firms, how that can be a problem not just for local house prices, but overall economic landscape and the growth prospects of various communities. All of that tied to the wider Chinese economy, because property is 30% of Chinese GDP, and China is highly interconnected in international markets. So the dynamic is relevant. Thanks very much for watching. Hit the like button, subscribe for more of these sort of shows, and tell your friends. Now on to higher or lower, and the first card is a king. So it's king you have to beat. Should have pulled that up at the beginning. I thought I learned from this mistake in previous weeks. So, higher or lower than a king? Let me know. You get your donations in quickly. Well, of course, you can join halfway through and probably still win. But you have to be, of course, if you want your answer recorded, it has to come through the fax machine, because Tradespotting doesn't have a pen. So, make it happen, as they say. Oh, I nearly lifted it up. I nearly got a sneak peek of what is coming next. What is coming next? So, the Chinese economy and its greater implications for you. Next up, we're going to look at how it is that these particular problems might extend into your wallet, and the dynamic that leads to a Chinese house causing a difficulty in your local economy. The great Chinese property market puzzle, and why the global economy remains unshaken. A high savings rate. Chinese households historically maintain high savings rates, enabling them to handle interest rate payments relatively easily compared to, for example, the US or Europe during the 2008 financial crisis. Pent-up demand, rapid urbanization in China, and a competitive marriage market. Hey, hit the like button, I'll put a ring on it. Have caused demand for housing and have ensured that the market continues to attract new buyers. State-owned banks. Major Chinese banks are state-owned, which makes them less susceptible to failure. The state intervention prevents then a full-blown financial crisis, which offers some stability in the banking sector and so stops the contagion from this particular issue. There is a limited foreign exposure to the problem. Foreign creditors to the Chinese property developers may face some losses and already have done, but the global impact is relatively minimal. Currently, foreigners hold less than 5% of Chinese equities and bonds, which reduces any international ripple from any potential liquidations. The structural challenges. The housing market issues stem from structural problems within China's financial system. Property investment consistently outperforms other investments, which leads to over-leveraging, and hoarding of land. And then the boom and bust cycle is exacerbated. Local government dynamics. Local governments heavily rely on land sales for revenue in China, which is encouraging developers to overexpand, which this transforming of that dynamic will require very skilled navigation and a fundamental economic restructuring, which will rely on organizations that can respond to regulatory need immediately and at the point of concern, as opposed to retrospectively, and make an example of any one person to teach others a lesson. There's also ongoing market cycles, as you'll be aware of in all economies. The current property market challenges represents the third major cycle in the last 10 years in China. While government intervention is necessary, overly quick and harsh measures could then backfire and require further compensation. So delicate planning in regulations is necessary. And there is a need for transformation. Addressing the housing market issue in China requires more stringent regulations, and it demands a fundamental transformation of the national economic structure. Achieving that goal, which is obviously quite large, necessitates careful government planning and strict but diligent implementation. This, alongside the ongoing market cycles, while analyzing and restructuring local government dynamics, could help China solve their internal issues. Globally, exposure is limited to less than 5% of the bonds, and so the ripple effect is limited. And that's why, despite the fact being a huge problem for China in the property sector, and its weighting as 30% towards GDP, that problem for China doesn't necessarily mean there's a financial problem with regards to credit and companies facing exposure to that problem. It's still true to say that China is highly interconnected in all global markets, and that the full impact of a disaster in China would extend beyond simply the debt and credit mechanisms within the property sector and our exposure to it. So that is why, despite the problem's huge, it isn't necessarily hitting your wallet right now, and it isn't the reason for the price rises that you're seeing across the board. Hit the like button. Now on to the next section of higher or lower. We had a king. So did you guess? I hope you got your donation and your guess in quickly. Here is the next one. Oh my God, man down. Guys, it's gone. It's a goner, but the show must go on. It's a 10. It's a 10. I wonder what it could have been. Do you want to know? Stay tuned. Oh my goodness gracious me. It would have been a 9, which most people would have guessed lower, and then would have been busted out on the 10. There's the 10 for proof. I'm not sure how much proof you're getting at that zoom level, but there we go. 10 out of 10. Thank you very much for playing. Thank you very much for watching. The next higher or lower section is coming up momentarily. Get your guesses in now. Fax requests officially recorded. Thank you very much for supporting the stream. This next section coming up is all about Exxon Mobil's acquisition of Pioneer and what that means for the oil industry at large, what it means for Exxon and Pioneer shareholders primarily. And then will there be more mergers and acquisitions, or murders and executions, as we call them in the trade, in the oil and gas industry over the next few months? I think maybe, and this is why. ExxonMobil is in talks to acquire Pioneer Natural Resources for $60 billion, potentially making it the largest deal of the year. This move signals a resurgence in major corporate acquisitions, indicating a shift from funding new ventures to acquiring established companies for growth. Despite potential challenges from antitrust regulators, this is the new trend. Pioneer Natural Resources, the leading player in the oil-rich Permian Basin, could help Exxon deliver 1.3 million extra barrels a day in the region. This trend reflects a broader preference among investors for dividends and stock buybacks over investing in new crude sources. Please don't mistake my enthusiastic tone for investing and trading to be in some way indicative of any support for hydrocarbon development. I don't think that new development in that sector is necessarily a great idea. But with regards to this particular deal, there's a lot of information to look to. Economics of mergers and acquisitions, M&A, versus capital expenditure, CapEx, is very important to understand. So why do companies prefer M&A to CapEx? There's an immediate growth effect. M&A offers immediate expansion of operations and market presence. This is compared to the time-consuming process of developing new projects through CapEx. You can also utilize cash reserves. Companies with substantial cash reserves like Exxon prefer using this surplus funds for acquisitions rather than putting substantial funds that could be delivering value for shareholders immediately into long-term capital investments. Efficiencies. The merger and acquisition strategy would allow companies to eliminate redundancies on both sides of that trade and streamline operations. That achieves cost synergies, which leads to increased efficiency and theoretically increased shareholder value through economies of scale. There's benefits for shareholders beyond that. The enhanced stock value. Successful M&A activities often lead to increased stock prices, which would clearly benefit existing shareholders through capital appreciation. Dividends and buybacks. Increased profit from M&A activity can be distributed to shareholders through dividends. So along with capital appreciation, potential passive income. Stock buyback programs and enhancing shareholder value is a big part of M&A activity. There's also benefits for the acquired company, the financial stability. There's also benefits for the acquired company, financial stability being a big one. Being acquired by a financially strong company provides stability and resources for the acquired company's future growth, which is attractive to their shareholders. It also provides access to resources. Acquired companies can gain access to the acquiring company's technology, expertise, and financial resources, which enables further innovation and development and allows them to pack a bigger punch. Why do cash-rich companies then prefer mergers and acquisitions? It optimizes your cash reserves rather than sitting in the bank doing nothing. Cash-rich companies prefer their money in M&A and strategic deployment, which allows putting those funds that are excess into ensuring the optimal utilization of all resources in the market relevant to the value chain that they're operating in. So if that money can generate greater value and greater return through another company that's your competitor, buying them makes sense. Market dominance. Acquiring key players in the industry is seen as, especially in the Exxon deal, as an excellent way to increase your market share. So this potential deal with Exxon and Pioneer allows Exxon, who are cash rich, to strengthen their market dominance and outperform any remaining competitors by buying somebody who provides them with access to a very relevant location geographically and pushes other people off the table. In summary, merger and acquisition activity then provides an immediate avenue for growth. It allows for efficiency improvements on both the acquired and acquiring company. This delivers shareholder value enhancements on both sides of the trade. Cash-rich companies leverage their financial strength through acquisitions, leading to market dominance, and that provides long-term sustainability. So this is why it's a very good idea for cash-rich companies to acquire others through mergers and acquisitions, as opposed to investing in capital expenditure. It's also particularly true in this industry where it's finite demand, whether or not it's a finite product. And so there will always be this efficiency in market dominance mechanism, causing the need and desire among shareholders to see mergers. And there's also a huge benefit right now to oil companies in that they're massively cash rich from huge profits over the last 2 years. And if they don't spend that money, they have seen how it can be taxed away. And so delivering an immediate return for shareholders takes away a risk to that potential sustainable advantage. So thank you very much for watching this section. As I say, hit the like button. And now for the next section of higher or lower. We had a 9, but it didn't count, so we're on a 10. It followed a king. The donations came in. They rang out loud and clear across Edinburgh. Here is the next one, folks. It's a jack. It's a jack. It's me and the jack. Hey, Jack, how's it going there? You definitely caught a lot of people off guard. They were thinking with the 10 it was lower. But of course, my horse, a flick in the tail, eh? So I suspect, based on the balance of probabilities, that the majority of people will have been dropped into the lava on that particular row, with the jack surprising everybody. A real turnip for the books there. So the balance of probabilities is how I have to run this show without having the unquestionable proof of undoubtable guilt, or should we say factual evidence in front of my eyes with regards to the crowd's participation, because this is a civil process as opposed to, a criminal process. Here we have you get the benefit of the doubt, but the burden of proof is, of course, much lower, which means we need the rules. Rules are so very important to traders, and this is a trading show. So here comes the next card. After the 10, we've got 2 in a go. I think this means that we're coming for a grand crescendo. Hit that like button, everybody. Here we have it. Hear it? It's making that noise. It's very familiar to Australians, that noise. You know why? Because it's the accompanying instrument with a didgeridoo. Anywho, if you didn't know that, you're probably not Australian. Here we go. Number 2. It is. You're right. It's lower than a jack. Congratulations. Congratulations. And on that note,
so, what are we going to call her?
Fanny. I want to call her Fanny.
We can't call her Fanny. Fanny, eh? I like it. It's unusual, unique.
My mum's a Fanny. Granny was a Fanny. She'll be joining a long line of Fannies.
Aye, it's good to keep up tradition.
Oh, Fanny, you're just like your daddy.